Saurabh Mukherjea, Founder and Chief Investment Officer, Marcellus, joining us this morning to help us make sense of what's going on. Rahul, Chadha, Founder and Chief Investment Officer, Shikara Investment Management, also joining in, as is Anup, Wadhawan, former Commerce and Trade Secretary. Welcome to all of you, and thank you so much for your time to us this morning on NDTV Profit. Saurabh, I'm going to start with you. I know the implied is showing a gap up opening. Net, what we've seen so far, is this positive India and Indian equity?
I would say on the margin, this is positive because remember 96 hours ago, we were at 50% and now we are at 15. So I can't see how that's going to harm us. Two things to be careful of. It does look relatively clear that Trump will use, I think, what they call 232, Section 232 investigations, which are already underway. I think he'll use that to say there are certain sectors that need special protection. I think those 232 investigations are underway, and my discussions with trade experts suggest that it's a matter of time before Trump uses 232 investigations to impose new tariffs. And by the way, those seem far more defensible from a legality perspective. And the second thing that the trade experts I consulted over the weekend are saying is he'll use something called Section 301 investigations as well, which allow him to target countries that the Americans believe are detrimental to U.S. interests. Again, those are fairly defensible. So his determination over the weekend that these tariffs will go back on suggests that we need to be a little cautious about enjoying the relief rally a little too much. The other aspect is to give credit to Trump and to our trade negotiations. We had tried very hard to get some advantage vis-a-vis China. Right, America wanted to put China on the back foot. We were very keen as Indians to get better terms to export into America than the Chinese have. To what extent those calculations have been upset by the Supreme Court ruling, I don't fully understand, but my suspicion is that piece will need reworking both on the American and the Indian side, so that Indian exports into America enjoy an advantage over Chinese exports into the United States. But overall, as someone who's invested heavily in export-oriented manufacturing companies, I'm looking forward to the relief rally later today.
Okay, Saurabh, so a relief rally is what you're eyeing in today's session. How sustainable is that going to be is anyone's question. Rahul, good morning. Hiral this side. So my question coming to you is, I mean, you have expressed cautious yet, an opportunistic view in the past as well when it comes to US tariffs. Now, when you're talking about even a 15%, a lot of commentators are of the opinion that 15% is not something which is going to be beneficial for a country like India in spite of it being lower than the existing 18%. How are you looking at it? Because there's a constant back and forth happening on that front. In terms of India, how do you see it being placed?
I think, as was mentioned before, near term would be more of a relief rally. But beyond that, I think what markets are more worried about is the air disruption and the job creation in the formal sector. Look, what we've seen in recent months is a momentum build up in the economy post these GST tax rationalization. It's going to be important to watch, does that momentum continue into the second quarter of this year? So again, it's going to be the economic recovery. What we are seeing in the Asian markets open is Korea do well, Taiwan do well. More importantly, China is kind of a bounce back because the biggest beneficiary of these tariffs being around 15 to 18% is going to be China, basically.
Right, that's the important view coming in. But Anup, good morning. Sharad here. The entire trade setup now, we are about to send our delegation there. That negotiation is also coming, it's getting delayed. We don't have the clarity of the dates where the negotiations will again start. So now where does India stand on the trade front?
See, the trade negotiations, I suppose, will resume at some point. But certainly the framework agreement, which presumed that our duties would come down to 18% from the 25% they had become after the Russia duties were removed, that premise is no longer true. Now the baseline tariff, which is the starting point for India, would be 15%. So certainly the framework agreement would need to be renegotiated, and I'm sure that will happen. And I think there have been some statements also from US authorities that, wherever countries have entered into agreements with tariffs above this new tariff, this new common baseline tariff for everyone, then that will apply. You can't have a trade negotiation and a trade agreement where your duty ends up being higher than what everyone is generally facing. So certainly that framework agreement under which the further negotiation was to happen, that will get amended. And perhaps that is why the trip to the US has been postponed, because these things will, I guess, need to be worked out. So that is a given. It has to be amended.
Saurabh, I'll come to you on IDFC first in a second, but there's so much to unpack this morning. I mean, that, frankly, for me was a shocker. They realized this only when Haryana government wanted to shift their accounts, that, oops, there's less money. Can't get over it. But this is something clearly that the bank is looking at. But to just finish your point on, the impact of tariffs for India, we might open with a gap up. The concern is, and the thought is, this is not going to last long, because we don't know what's happening next. And how significant, in your view, is the fact that we've postponed the finalization of our terms of agreement at the 18%?
Yeah. So I think I would split it into two parts. I would say, look, both for Indian companies exporting into America and for the American economy, the worst of Trump's tariffs are behind us, right? With the Supreme Court snub of this scale, I think the worst of Trump's tariffs are behind us. And therefore, the relief rally in the Indian manufactured goods exporters that we are expecting today, while it should be modest, I think this should be the beginning of a new chapter where with the US-India bilateral trade agreement hopefully signed at some stage over the next couple of months, we move towards a far more constructive trade regime with America. And hopefully this is the big win I'm sure the Indian negotiators will aim for. Hopefully we end up with an advantage vis-a-vis our trade rivals such as China, Bangladesh, Vietnam, right? So that's the India piece. From an American perspective, the worst of Trump's tariffs are behind them. Remember, as you flagged up, they've seen slower growth. They've seen inflationary pressures on the back of this. And I think from a US perspective as well, with a snub of this scale, with the midterms approaching, I think Trump will be far less aggressive with his tariffs. And that bodes well for the American economy and for investors like us and our clients in India, who are heavy investors in the US economy, right? Over the last 4 years, as you might know, Tamanna, we've invested very proactively in European and American small and mid cap. We've made a lot of money on the back of that, and we hope to carry on profiting from what will be, I think, a more constructive trade regime that the US government will put together. So there will be plenty of noise in the coming weeks as well, plenty of stuff for journalists and investors like us to fret over. But I think the worst of the tariff episode, which started at 2nd April last year, the storm has passed, and gradually I think things will settle down over the next 6 months.
Okay. So, Saurabh, you're saying the storm will settle down over the next 6 months. So, currently, if you are an investor or advising someone who wants to look at the markets, because valuations have somewhere come off in terms of India as compared to where we are, we're still expensive. Would you say it's still time to avoid your export-oriented sectors, which are US-facing, because of this little bit of uncertainty which still prevails? And this is the best time to look at domestic-oriented sectors? And if so, which are the ones where you think the valuations have now started to become reasonable?
I would say the reverse. I think this is the time to load up on export-oriented sectors. I think the coming of AI does mean a setback for the Indian IT services sector. It's a big sector. IT services is a big creator of jobs. It delivers $300 billion of forex. The gradual maturity, call it decline of the IT services sector will lead to a rebalancing of the Indian economy. I think it will lead to a weaker rupee. Rupee weakness, I think, will sustain because IT services was such a big forex generator. The combination of a weaker rupee and these free trade agreements give us a really big chance of becoming a substantial exporter of manufactured products into the Western world, into Europe and America. And I think over the next 5 years, the Indian economy will pivot towards manufactured exports. Many of these manufacturers who are $500 billion market cap today, I think 10 years hence will have $10 billion, $15 billion market cap. And we at Marcellus are spending a lot of time figuring out how much to load up on them. I would be very cautious of loading up on domestic consumption. I think it's been juiced up by the sugar rush of the tax cuts and the rate cuts last year. I don't think that's sustainable. I think domestic consumption will weaken again. And I think India will gradually become a manufactured export-centric economy, much like the Southeast Asian countries have become over the last generation or so.
Saurabh, good morning. Sharad here. We're speaking about IDFC First Bank. Over the weekend, there was an adverse announcement coming in of almost a 590 crore worth of fraud. And we just heard the con call also where the bank has stated that they would be getting in a KPMG as a forensic audit as well. Your initial views on that and what does it mean?
I think, look, there's plenty to discuss there. I'm sure Vaidyanathan ji is addressing many of those concerns on the conference call you flagged today. I think the RBI also should be saying something. Credit to IDFC for doing the call first thing on Monday morning. But I think the RBI also needs to step up and say what exactly is happening here, because as a depositor in the Indian banking system, both as a CEO of CIO of Marcellus, as the depositor in the Indian banking system, as someone who's got personal money in the Indian banking system, if a state government's money can go missing, then what assurance do I have that my money is safe? I'm a little perplexed by what's happening here. I don't fully understand how the employees colluded to defraud the Haryana government, no less, right? So if a state government can be defrauded for hundreds of crores, what protections do we as small depositors have in the banking system? I wish the central bank was doing doing a similar call on Monday morning.
Okay, Saurabh, that's an interesting thing because, if the state government can be susceptible to something like this, absolutely true. What happens to, a layman or someone who is depositing their money with these banks as well? But yeah, that's something which the RBI should get cognizant of as well. But thank you so much for joining in. Always a pleasure,
My pleasure.
to speak to you.